Good morning, Facebook world. How are we? We're getting Mitch here. Mitch is coming on. Let's remove that. There we go.
Mitches.
There we go. We may be good at real estate, but don't make us spell.
I'm not good at spelling.
Yeah. Hey, I know most people that are high school reading level that are millionaires. So I don't think that's a prerequisite to success.
I'm one of them.
Thank goodness. Yeah. I don't know how I even passed basic algebra. God, useless, right? Kind of useless.
Yeah.
We're gonna wait a few minutes for people to get on. If you guys are here, let Mitch and I know in the comments where you're watching from. Of course, this is an interactive segment, so obviously we're going to be taking questions live after we get rolling here. We're looking for questions regarding business. Specifically, Mitch is an expert in multifamily and apartments. He's been in real estate for many years, and he's a great guy and someone that has a bunch of knowledge that can, really help you. He's very transparent in the things that he's doing, and he kind of is a great resource for you guys out there that are looking to get into the multifamily game, looking to figure out how to build wealth, cash flow, all the good stuff, right? So happy to have you on, Mitch. Thanks for coming.
Thanks for having me.
My side is a little darker here. I'm sitting in my garage, which is usually what I do these days, and so I hope that's okay on my end, if you guys could see me okay. But that's okay. Today we're talking with Mitch, so he's got some good lighting in there, so we're good to go on that end. Mitch, so as people kind of get on here, give us a little bit, a 2-minute, hey, this is where I started and now here I am kind of overview.
Okay. Just to kind of give you guys an overview, like Matt said, I didn't go to college. I actually didn't graduate from high school. I took my GED after the fact. So everything that I've learned is kind of trial and error. I started out in construction as a construction worker, working for a family business. And then I decided I wanted to get into real estate in 2006 when the market crashed. Perfect time, right? I think actually it was a perfect time to get in. I learned about, short sales, REOs. I started out working with other investors who were flipping properties. That's how I learned how to flip residential properties. I worked with a hedge fund. So, from like 2006 to 2010, I sold real estate. And then, I was helping other investors buy single family residence from short sales REOs. And then I started learning how that process worked. I also learned about court step auction, investing at the same time. So what I did was I actually met some guys who were buying court step stuff that didn't know how to do short sales and REOs. And so I helped them, buy just short sales and REOs, and I got to learn the whole entire flip game.
But why real estate, Mitch? Like, what got you? Like, did you have that in the family, or did you just wake up one day you're like, I want to be a real estate guy?
You know what? It was a combination of a little bit of both. My family was in construction, in development, and so I kind of grew up in that whole side of it. And then, I started seeing like the difference in how much those people, like who was working in real estate and how much they made versus what I was making. I was running a family construction business with, under one of my relatives, and I learned everything. The good thing is like, it wasn't easy. Like, I learned everything from digging holes, plumbing, electrical, all this other stuff, but then I also got the opportunity to learn how to run a business. It didn't pay a lot of money, but what it did is it taught me that, there were other opportunities out there in real estate where I could earn a lot more income based on all of the knowledge that I learned through construction. So for me, and when I started in construction too, I really wanted something different for me and my wife. And when I started, I started selling real estate January 1st of 2007, right when the market was crashing. You know what I
Terrible
mean?
time.
With my
Terrible.
wife's brother. My
Yeah.
wife's brother was a broker. He was already, he'd been a broker for a while. He went through the crash, So it was interesting because when he first came out, he actually was out in the Riverside County, Temecula area selling real estate, and he was killing it. And then all of a sudden the market crashed. And literally overnight, all of his business ended. And so he came up to Fresno, and we started working for this company. It was one of the online companies at that point. It was called realestate.com. And I remember we were doing door-to-door BPOs in 2008 for $35.
So BPO, guys, if you don't understand, is a broker price opinion, right? So you're like kind of you're not an appraiser. You're more of a broker who can go out and give a valuation, right? Like it's a quicker route than a full appraisal, right?
Yeah, exactly. And then we also started doing door knocking for loan modifications. During that time, there was companies. I don't even remember the names of them now, but they would pay you to go do, to try to take the bank documents to the resident and try to offer them, negotiations with the bank. But then also like the market in Fresno, I was selling real estate in Fresno during that time, and during like 2007, like any Mac bank crashed, all these banks crashed. So the difference was like when I went from construction to real estate, I wanted something different, and I wanted something that I could actually have control over, which was my own destiny. Right. And so when I went into real estate, I made a decision in my mind that I would do whatever it took, as long as it's legal, ethical, and moral. I don't have a limitation, as to like how many hours I'll work, what I'll do, whatever time I have to get up in the morning. I don't have any kind of limitations, and I didn't when I started out. So when I first started in real estate, I was still working for my brother-in-law, co-managing that company, day-to-day operations. I was working 50, 60 hours a week. I was selling real estate at nighttime. During those times, you could do real estate and loans. So the loans were starting to go bad at that point. So I started doing refinances for friends and family. And then that's kind of how I started getting a referral base. And then I was able to exit the construction business. And then from there, it was just a series of like experiences, from finding someone who had a need. Like, when I met the guys who were flipping properties, we actually, like, right at the point when my real estate career started taking off in Fresno, and this was like 2009, my wife and I decided to move down to Southern California. So I literally went from making a 6-figure income to zero in San Diego again. But what I took with me was all the experiences and what I was willing to do to go out and be successful. So
you mentioned too, sorry to cut you off, but like I wanted to really hit on this point, was a lot of people get into real estate not thinking about how to create a business, right? They think about running in there and doing everything, and trying to be at all places at the same time. But I always look at, like they say, you can't connect the dots looking forward, only backward, right? So, you mentioned your experience in construction and having your family in it gave you that foundation to look at like Mitch Pomeroy as a business, as an entity, as opposed to, let me just go out and just try to be an order taker, right? Like which most agents do. They get into business and say, okay, what can I do? Can I go write a listing? Can I go show a house? Can I, drive people around? And ultimately they get into this rut or this routine, and then they get burned out because they figure, man, like I'm doing everything all day, and 2-3 years into it, 4 years, they get burned out and they're like, I can't create a path. So guys that are watching, and it's something that I think Mitch has been able to do, is have that frame of mind. Like, how can I create this into a business that's going to serve Mitch, right? That's how you looked at it.
Exactly. Well, and during that time too, like, okay, so now like you go from having, from making $100,000+ a year in the economic crash to moving to a new market with zero income again. But what I did when I was in Fresno was I was willing to we went through, and my wife would help me on the weekends. We would actually go in and find all the notice of defaults. And then I would print them out, and on every Saturday and Sunday, that's all we did all day long was mail out 500 to 1,000 letters. And then I was posting in LinkedIn, in Active Rain, and Craigslist ads, to try to help people who were in foreclosure. And I started getting listings during that time. Well, so that business built up. Then all of a sudden, when I moved to San Diego, what I did was I saw when I was in Fresno, there were all these REO brokers who were just like dominating the market. And if anybody was working in Fresno real estate during that time or any other market, I'm sure they know who those names were. These guys had hundreds and hundreds of listings.
Yeah, they own the business, right? They own the majority of it.
They did. And so what happened was for me was when I got back down to San Diego, I just decided, you know what, when I'm here, I'm going to go and I want to go work in one of those offices and learn, how does this guy have 400 listings? And it wasn't that he had 400 listings. For me, I wanted to learn a system and a process. Yeah. Like, how do you manage 400 bank-owned properties in one shot? So I went in there and I got to, I actually found, a really big broker at that time was handling a lot of REOs. And I went into their office and I actually got to sit. The first question they asked me was, what are you willing to do? And I said, I'm willing to do anything to be successful.
I like that.
As long as it's legal, ethical, and moral, So that's what I did was I went in there and I got to sat with everybody on their team. And for 6 weeks, that's all I did was sit in this office with each person who was taking, all the information that was coming into a database from the banks to the asset management companies to, all these other, pieces that they had. And during that time, what happened was there was investors calling in that were looking at these REO properties. So what happened was there happened to be a group or some guys. It was 2 guys that were doing court step auction stuff. They were probably buying, and flipping like, I don't know, 5-6 properties a month at that time. So what happened was they happened to call in on some properties, and so I started talking with them, and then I got to know them a little bit more. And they had already had a bunch of properties on the market with top brokers that were not selling. And I told them, I said, hey, what if I went out there and I'll inspect all your properties for free. I'll do a report. I'll tell you what I think needs to be done to the properties and what you should actually be selling them for. Because I told them my experience, and so at that point, so that's what I did. And I drove all over San Diego County and I looked at all these different properties and I gave them evaluations. And what had happened was a lot of the properties, nobody had been there. So the construction wasn't done. The grass was dead. There was trash on the front porch, and these properties were being shown. The pools were half empty. They were green. So what happened from that point was I didn't actually get any of those listings as a real estate agent. But what happened as soon as I told them that, those properties started selling. Then as they started selling, I think maybe 2 of the listings, there was like 20 properties that I had driven the whole entire county. So then what happened was I by doing that, it built a relationship with them. And then after that point, I started showing them how to buy short sales and REOs and all that kind of stuff. And then I started helping them with court step auctions where, we had like drivers. So I used to get up at 4 a.m. and we were comping anywhere from 200 to 300 properties a day before, and so we would start at 4 a.m. I would start copying properties. We had drivers that would go drive the properties all over. Initially, it started in San Diego. Then it went to Riverside in LA. And we had people at the auctions, that were bidders. And so I helped them with that whole entire process. And during that time, what happened was we went from doing, 4 or 5 properties a month to doing, at one point, they had landed a contract with one of the hedge fund companies, Colony Capital. So we started doing acquisitions for Colony Capital at that time. And so it went from buying like 5 or 6, properties a month to 5 or 6 a day. And so what happens is then you see a process on like a massive scale.
Right.
But what it did for me is it actually it put me in the middle of a bunch of different experiences, from, doing acquisitions to learning how to flip, single family residence, to, managing multiple properties at a time,
Well, what I see you do or did is, the way I look at that, or the biggest thing that I am learning from your story is you created value when you didn't have anything. Like, you moved back to a market with zero, you started at zero.
Yeah.
And, most people would then start getting kind of concerned or nervous, like, oh my God, I don't have anything. And then maybe they kind of sit back and wait for stuff to come or hope, right? You took action and you went out there like, okay, where can I identify a need? And then you made yourself valuable, right? Just by, hey, I'll go and take a look at these properties. I'll do comps for you. I'll do whatever it takes. And I think there's a valuable lesson in there for people that are either starting in business or have hit a rut. Like, what are you doing to move the needle in your business? What are you doing to provide value? If you don't have experience or money or relationships right now, who could you go to, like a guy like Mitch or a guy like myself, and say, hey, I really want to get started in real estate. What can I do to, I don't like the question, like, how can I add value to you? Because everyone seems to say that. It's like, hey, I'm looking at this opportunity. Here's what I think I could do for you. You know what I mean? Like, present something, be aggressive in your thought process and how you can add value to someone. Don't just ask someone, hey, how can I add value to you? Because, it's a generic question. But you saw a need, you filled that need with taking action, and it then created more opportunity for you, which I think is amazing. And I don't want to let that kind of, point pass by. I want people to understand what it takes to go and be very successful. And, you did that. And then you said, okay, talk a little bit about, like, you grew a pretty sizable fix and flip business, right?
I did. So what happened was, so from all those experiences, I got to a point where I started understanding how to raise capital, how to start, buying my own single family residence with no money down. So everybody always wants to know, because you see there's a lot of gurus on the internet right now.
Well, yeah.
The number one question that I always want to know is, how many deals have you done and how many are you doing right now? Because if you're not doing deals right now, especially during these times, it's not as relevant, as like someone like you or I who are doing deals right now,
Right.
So what happened was, I learned that business, and then I started creating mini partnerships with people who had money. So I didn't have money. What I did was, what I had was knowledge, though, and I had experience. And so you can't create an algorithm for experience. That's just trial and error and going through and actually just doing the work, So by creating, partnerships, what I did is I found people who had money, and I had the experience to go out and start, buying properties. I managed the renovations. I put renovation teams together. At one point, I had my own construction team in-house. I realized it's actually better to subcontract everything out as opposed to have everybody in-house. One of the reasons why I did that was because when I had everybody in-house and, all the construction people, what happened was when they make a mistake, I pay for it 2 or 3 times because I'm still paying for it until they get it right. When I hire an outside vendor and we have an agreed contract, then, I pay one time, right, and they pay their staff,
Yeah.
So what happened was, I got to a point where I was buying, creating partnerships, joint venture agreements, and all that kind of stuff. And when I first started out, it wasn't like, some of the people out there were, borrowing money at 10%. Some people were giving up equity. I did a variation of both. So I was doing single family residence, 2, 3 at a time. I got to a point where I was doing like 20 or 30 at a time with multiple partnerships, multiple equity, splits, depending on what it was. I did have my own real estate, team in-house where we were able to sell the properties. So I got to a point where, it was just a massive rat race. And I was making a lot of money. There was no doubt about that. But it was like I was just in a hamster wheel. And so about 5-6 years ago, I got to a point where I wanted more of a long-term passive income goal.
Okay.
And I wanted to get to a point where, because at a certain point, I mean, I love what I do. There's no doubt about that. Like I love and eat, sleep, breathe real estate all day long and all night and all weekend. You can ask my wife.
Yeah.
She knows.
I know that. Yeah. Yeah.
Yeah. I mean,
you love it.
I love it, but at the same time, I started getting to a point where I was like, okay, I want to have like income no matter if I get up and go to work today or not.
Let me just, Mitch, share with people, because I love this stuff. Like I love when people share their vision or their dream. Like share with people. Like some people might be sitting here thinking like, okay, he had this vision or goal of creating this passive income, and maybe people don't realize how big you can think. Just you've shared it with me, and I think it's awesome. Like when you started this, you're like, I have this number in mind. What's the number that you want to get to?
So my goal right now is to own 10,000 doors with partners, friends, relatives, and anybody who wants to earn passive income in the next 3 years. And so that's my 3-year goal.
3-year goal. Okay.
3-year goal.
3-year goal is what's that number?
10,000 doors.
And what's that projected cash flow?
So how I came up with the goal was when I was flipping houses. I was still flipping houses in Southern California when I bought my first fourplex. And then I bought from the fourplex, I went to a 24 unit complex. And then when I got to 40 units, I was looking at the difference of like how much it costs to cover debt service on single family residence every month. My debt service at that time on single family residence was anywhere between $90,000 and $110,000 a month just for flipping houses. And then my multifamily, even with hard money and bridge lenders, the tenants were paying most or all of the debt service. So at that point, that was my aha moment, I would say. So I actually started selling off all the single family stuff at that time. I was also at 40 units, and I happened to go to an REI meeting in northern San Diego, and I met somebody that was doing apartment syndication. And apartment syndication is where you put a group of people together to co-invest into apartments. So what happened was I got to a point where I was at 40 units, and I didn't have a lot of partners or anything like that. I had a couple of investors, in the deals, but they were all just fixed return investors. So I owned a vast majority of all the equity in the properties. But what happened was when I got to that point, I was like, wow, I saw the difference of like how much, I was able to take, apartment buildings and increase the equity by 25 to 100% in less than a year and a half, a year to a year and a half. So what I did was at that point, when I hit 40 units, I had an idea in my head where I was like, what if I could create, partnerships with other investors, family, friends, relatives, people I meet at investment meetings, and I could own 10,000 doors and make $100 a door. That was my goal, to co-own 10,000 doors and make $100 a door a month, which is $1 million a month.
$1 million a month.
Yeah.
1 million a month. Right. So let's let that sink in for those that are here watching. 1 million a month, right? Like that's some people can't even fathom that that's even possible, right? Like that's so out there. But really, if you're talking about real estate and building wealth and the potential of it and what others are already doing, it doesn't seem so far out of reach, right? It's something that, man, like you've already gone through from 0 to 500 doors in less than 2 years, right? Approximately.
Yeah. So in the past 5 years, what happened was I got to 40 units, and in the past 2 years, by collaborating, creating partnerships, you know, also help. A lot of it has to do with just helping other people achieve what they want. A lot of those people. Hey, Andy, I see you. Andy Nezeroff. I started at Guarantee Real Estate in my early years with Andy Nezeroff.
Yeah,
I remember.
Has been in real estate in Fresno for years.
Yeah. People. Yep. So one of those things was with as far as like the apartments go, you know, and a lot of other things happen too, like with apartments. So which I've kind of just learned, you know, over watching lots of YouTube videos. So a lot of people want to know, like, how do you learn, you know, about apartments, investing, real estate, wholesale, any of this kind of stuff? YouTube videos. I watched a lot of YouTube videos. Some of the best teachers on the planet are on YouTube, in my opinion. You can go in, you can learn anything you want. Right now, a lot of people are at home. They have a lot of time on their hands. Yeah. Perfect opportunity to go and learn anything you want and become anybody you want to become. So how I went from 40 to 500, we did that in 2 years. And that was pretty much by just partnering with other people. So I started going to, one of the things I did is I'm constantly talking about what I'm doing. Everybody who I meet, you know, I'm letting them know what I'm doing. Here's what I'm doing. Here's how I'm doing it, you know. So my model is I buy mismanaged, deferred maintenance apartment buildings with rents that are 50 to 100% below market value. And everybody asks, well, how do you find those deals? I find them through relationships from property managers, real estate brokers, contractors, and I'm talking about the landscaping guy, the plumbers, property management people, on-site managers, the mail guy, whoever, you know. I'm just constantly talking to people about what I do, how I do it. The other side of it too is that, you know, we're rehabilitating. Hi, Benny Clay on there.
Benny's asking, what do you recommend watching on YouTube?
You know what? Recently, okay, so I stopped watching the news about 6 weeks ago, and most of the people who I watch are like just recently, Mark Cuban. I watched Mark Cuban. I watched Robert Kiyosaki and Dan Pena, who's crazy, but you know, I had the opportunity to go to London in January and see Dan Pena. And so, you know, but a lot of these kind of guys, I mean, these are people who just go out there, you know, and do it, you know, like Mark Cuban started out selling whatever out of the trunk of his car, you know, 6 guys living in a
you're watching business guys, not so much like other real estate investors, right? I think, you know, there's a lot to be said from just seeing how other successful entrepreneurs have run their businesses, and then take what you learn from them and apply that to your business, right? That's kind of what you like to see, right?
Yeah. Well, you know what? I mean, the other side of it is too, is that I also talk to people like you, to people like, you know, like Stratton, people who are doing business and are out there like grinding every day, trying to figure out, you know, what's happening like in the current market, because whatever worked yesterday definitely is not what's going to happen right now. You know, we're moving from America 1.0 to America 2.0. 1.0 is over. I mean, we're going through it right now. Like, you know, all of everything that's happening out there, everybody knows it. Like the restaurants, the retail, you know, office space, all those businesses are taking massive hits right now. You know, there's going to be a lot of default in the hospitality, retail, and office space. You know, so who I'm talking to, you know, I mean, on YouTube, like that's who I've kind of been watching lately. But what I also do is I reach out and I'm constantly talking to everybody else who's doing what I'm doing, or a version of real estate, you know, from like you, Stratton, you know, I see Matt Larson stuff on there. I talk to my property manager, Paul, all the time, because we're trying to see like the trends, like, you know, like everybody's constantly asking like, how are your rent collections right now? You know what, for the most part, outside of everybody who was already in, you know, in an eviction process, or, you know, who lost their job to COVID-19 or have lost income. What we did out of the gate was we started communicating with the residents immediately 8 weeks ago. And one of the things that we realized is that everybody's going through a tough time right now. So one of the first things that we started doing was talking to the residents, telling them about their options between unemployment, city, state, programs that are available. And then, we also went out and started explaining to the residents that, just like how you guys pay your bills, this is the same way that we pay our bills, and how we maintain the complexes and cover the, pay the water bills every month, and the landscaping and all this kind of stuff. So, so here's what we did is we went out and we just offered to everybody, hey, if you guys pay your rent before the 5th of the month, we'll give you a $25 grocery gift card to the grocery store closest to where you live.
Oh, that's cool.
And so by doing that, like we did that this last month, May 1st, and we had 90% of the residents paid by the 1st, which was
90%.
Yeah.
Paid by the 1st. Wow, that's strong.
Yeah. That was pretty. And one of the complexes actually everybody paid before the 1st of the month, which I was like, wow, And then the other thing too is I'm a little bit more active probably than most apartment owners. I'm not absentee. So I'm actually, going to the properties, because I have investors also. And so everybody wants to kind of know like what's going on, what we're doing. So we're doing a lot of video tours of the properties now. You'll see it on Instagram. I've been posting a lot more of the videos also just for people to see. But what's happening though is like the on-site managers and the residents are actually coming out and thanking us for thinking of them and actually giving them grocery cards during this time.
Right.
And so
that's cool. Yeah, that's cool, because if you want to look at some of the skeptics right now, Mitch, I mean, I'm sure you've seen them and heard them, they're saying, this asset is on its way to, having a big problem, in terms of vacancies and values and, the lending environment and, economic vacancies with all the unemployment. But what you're saying is, you guys really haven't skipped a beat, right?
I mean, we've had a few little hiccups here and there with residents, but like I said, a lot of them were people who were in eviction or who did truly lose their income.
Yeah.
But I'll tell you one thing I noticed though is once we offered the grocery card, like we had somebody who couldn't pay their rent in March due to COVID-19, but then by reaching out, communicating with them, they actually did pay their May rent, and we gave them grocery cards and all that kind of stuff. And so, I think a lot of it is just communicating.
So they're kind of back.
So
yeah, and right? Like you're not some absentee, like you said. They're not just a number to you. They're people, and you're sympathetic to what everyone's going through. So that goes a long way, right?
Exactly, it really does. And and the thing is like I'm not doing it by myself. I can tell you that. I have a great team. And when I mean team members, it's not like there's only 2 people that work with me internally. Everybody else I look at as a partner, from my property management person to, the contractors, the landscaping people, whoever it may be. But the property management team is definitely one of the most important teams, like in your, whether you're doing single family residence, whether you're doing apartments, whether you're doing Airbnb or whatever it is, whoever your property management team is, they're going to be like your top 2, that are going to determine your success. That's for sure. Because the property management team that I have right now, I mean, they're considered essential right now. Everybody in real estate's essential, property management, construction, so, I mean, these people are out every single day. We haven't stopped, like our renovations, our leasing, our showings. We've gotten they've gotten a little bit, we've had to change the approach on the showings now. So now they're doing a lot more virtual tours. They're doing online applications, in order to do that. I do a lot of Section 8 and Housing Authority. So that was one of the things that I did when I started in multifamily 5 years ago, was that I wanted a model that was as close to recession proof as possible. And how I did that was I wanted, I don't know, you can call it socialism or whatever you want, whatever direction like we're going in right now. But I kind of realized at that point that, to me, the way I looked at it was the government collects all of our taxes and they throw portions of it out the window. I just want to stand under the window that they're throwing it out of. And to me, I looked at how can I, become an apartment owner, a passive investor, and also be recession proof. And so one of the ways that I was able to do that was I looked at housing authority, Section 8, helping the VA, and that's how we started. Because we started out with that. And how that happened was when I looked at when I first started analyzing apartment deals, one of the things that I looked at is I looked at how much does housing authority pay? What is the demand of housing authority? Section 8 residents, seniors, VA. And a lot of times, like, people have, a bad, taste or look about housing authority or Section 8. But the reality of it is there's a lot of people that, and it's going to continue to increase right now as people like lose their jobs, lose, their income, the cost of living increases. We have lots of seniors. We have lots of VA people who are coming back,
the demand there.
Yeah, well, it's not just the demand too, and then also the other side of it too is that I started from nothing. You know what I mean? I had nothing when I started. So the other way I kind of look at it too is it's a paying it forward kind of thing, by giving. So I give people second chances because I've had a lot of second chances, when I was younger. And so what happened was when I started out, we started doing housing authority, we started doing Section 8, we started, with VA residents, seniors, and what we've been able to do is, housing authority and Section 8, by the way, they pay 50 to 100% of the rent. So in a time like this, when people are losing their jobs, or don't have jobs, or if you have housing authority and Section 8 residents, there's a huge demand right now for housing. So to give you just kind of like a brief example of that, in the past like 6 weeks, we have shown more units and leased more units in the past like 4 to 6 weeks than in the past 6 months.
Okay.
The demand is like that high. And like I said, a lot of people have like a bad taste about Section 8 or something like that. I mean, my property management team, they interview a lot of people. They do credit, they do background, employment verifications, all these different types of things to make sure that we get the best residents. And I mean, overall, I mean, you're going to get some people that are disruptive in an apartment complex, especially when there's lots of people, and during these times right now, when everybody's home and there's like challenges financially, but we've actually had a really good mix. We've actually been able to take neighborhoods that were dominated by drug dealers and completely change those areas, to neighborhoods with families, with seniors, with VA, people coming out of the military, and so there's also like there's a part of it too about paying it forward, we are careful on the residents that we do pick, but at the same time we give people second chances too. Like maybe they had a blip on their credit report, there's going to be a lot of those kind of people, by the way, in the next year, where people are going to have challenges in, their credit because they had to live on their credit cards and, all that kind of stuff. But, we give second chances to people. And, at the same time, by working with Housing Authority, Section 8, VA, Marjorie Mason Center, West Care, these are some of the places in the local, like Fresno market, at least, that have, residents that need housing. Well, across America, there's all these other programs that are available in all these different cities as well. And they help you as a landlord pay rent, and help the residents who are, in need right now.
You're going higher operation level, so I'm going to scale it down a little bit. I want you to put yourself in the shoes of the guy or the wholesaler or the new investor that is looking at this whole thing like, okay, he's going a little bit operational. I don't even know where I would even start, right? Like, I don't have those problems. Like they don't register to me. I'm speaking objectively, right? For someone that's watching. I just want to know a couple things. Where do I start? And how would I go about getting into multifamily? Talk a little bit about like very low level, no experience. I've never owned an apartment. I wouldn't even know where to go, what to look at, how to start. So just put yourself in their shoes, and what a piece of advice do you give them right now?
So I think one of the easiest ways to probably start out in multifamily is to, if you have no money. In fact, when I came to Fresno, I had lenders before that did not come here with me. Like I had to start from zero. So what I did was I found someone who was willing to put the money up on the deal, and I found the deal.
Okay.
And that's how we kind of started it, because I couldn't find anybody to lend like when I came back to this market. And so that's pretty much how I did it. Was I just found a private lender. And a lot of people say, oh, well, well, I don't know anybody who will lend to me. The best way to get people to partner with you is to give up equity. So, and I did it in the beginning on some of the first single family flips that I did. I gave up 70% of the deal.
70. Yeah, if you guys are understanding what he's saying, it's like, don't let your lack of money or knowledge really prevent you from going out there and taking action. I mean, taking imperfect action, consistent action. We like to say the money will follow the deal, man. If you find a deal, you could find the money, right? Especially nowadays, with being able to connect like this and know the people out there that are looking and able to help. All of us have started giving up more than we took. I mean, that's just part of business. So if you're going into these deals thinking I've got to keep the lion's share and I've got to figure out how to do this by myself, like you're making a mistake, because there's so many great partners out there that can help you bring resources that you don't have. Where I think you need to learn to be resourceful is providing value and then going out and finding these deals. And if you don't even know how to even what is a deal and what's not, that's where you kind of are able to leverage the YouTube University, leverage a guy like Mitch, who's local, myself. Hey, bring us a deal. Let's help you run through it, show you how to analyze it, show you what you're supposed to be looking at, and then tell you kind of,
I think
here to be resources for people, so that, and we're not here trying to, take a deal.
Yeah. Well, yeah, that's it. I mean, if you look at it like if you're starting from nothing, and it's going to be a lot different now than it was before. Like before, 8 weeks ago, you could go to a real estate investment meeting. Now it's like, this is how business is going to be done. Like, being on calls like this, seeing the other people who are in the comment line asking questions, collaborating with all those different people, posting on your social media site, posting on other people's social media sites, sitting in on, Zoom calls, and just collaborating with other people. I think the best way to get started is to collaborate with someone else who's already done it. And then, figure out a way to raise capital by giving up equity. Is really the best way to do it. And then I was looking at one of the comments here. Let me see. A couple of the comments down here was finding out more about how to find the deals. Okay, so finding the deals is the exact same way. It's talking to who's doing 90% of the business out there, and usually like in your market, if you're doing single family residence, you could go out there and look and see, like, Jason Pritchard's doing a lot of deals. Great. How can I partner with that guy? Matt's doing deals. How can I partner with that guy? If I could bring deals to that guy, would they do deals with me? Yeah, they would. Yeah. They would absolutely partner with you. And the thing is the more people you call, the more opportunities you're going to see. Call, like email these people, ask them, hey, what are you looking for? Like, how can I help you? How can I add value?
Mm-hmm.
if you call anybody who's, or anybody who's out doing deals right now and you ask them, hey, how can I work with you? How can I add value? And then you tell them, here's what my skill sets are. They might be able to find, something for you. And I'm not saying they're absolutely going to be able to find something for you, but just talk to everybody out there who's doing deals right now. How do we find deals? We find deals by, a lot of people say, do you buy deals off the MLS? Yes, we buy deals off the MLS. I'm buying one right now. We're closing on a 7-unit apartment deal that was on the Fresno MLS. I bought it for $50,000 a door. We just closed on a duplex. How did we get that done? That was a cold call. It took us 1.5 years to get that deal done. It was 1.5 years of phone calls, follow up. The seller wasn't ready. And finally, we had talked to him so many times. Tyler, who works with me, he talked to this guy for 1.5 years before he was ready. But I could tell you one thing, what that seller did do though, was because he communicated with him for so long. And then I, picked up the last, portion of it. He honored the price that we originally started at, even though he had a real estate broker that told him that it was worth more.
Oh, so there you go. So you had the relationship built with him, and you established, trust, and he liked, working with you, right? That was the most important. So it goes to show, money is, or price isn't always everything, right? Oftentimes it's not.
Exactly. And in the same token too, it was still a good deal for us, and we actually ended up, I bought it during COVID-19. It was still a great deal for us. And sometimes so as far as finding other deals too, so the thing is here's how I look at it. I look at Housing Authority as a partner also. And the reality of it is that they are a great partner. They have a lot of residents. They do cover, 50 to 100% of the rent. You can't be a slumlord though. I'll tell you that. They do have guidelines, but the reality of it is though, is if you buy an apartment building and you do your cosmetic renovations, you paint your flooring and all this kind of stuff, you're not going to have a problem with passing any of their inspections. And, in the recent 6 weeks, like I said, our showings have gone up 4 times the amount of what they were 6 months ago. Our leases are, we're actually leasing properties a lot faster. In fact, some of them are actually leasing at higher amounts than what we originally thought we were going to get.
That's encouraging news, right? I mean, when you're like you said, you're avoiding watching the daily news because most of it's doom and gloom and not a lot positive. But this is cool to hear from you, someone that's in the business. You're doing deals. You're actively buying, managing, renting. So there's a lot of moving parts in your business, and it's cool to hear that despite all of the things that are going on with the pandemic, business as usual, we're pushing forward, right?
Exactly. And even so to answer Daniel's question a little bit more, he's asking where are we finding deals? I bought 2 deals from Matt. There's deals that come from Matt. There's deals that come from Stratton, from Jason Pritchard. It's just working with also a lot of the wholesalers out there too. So even the single family guys who are doing wholesaling out there, we're constantly looking for apartment deals. And so prior to COVID-19, I would just if Stratton was having an event, I just go hang out there. I want to go talk to people. I want other people. I want to be around other people who are doing what I like to do, which is talk about real estate, talk about investing. You never know, that person might have a deal, just a lot of times, maybe somebody is nervous or about learning about the business just because they have limited information. The best way to do it is just get out there, get around people, even if it's online right now, like this, Matt had this great idea to just start doing, daily postings or, Facebook Live events in order to, kind of, give people information, but it's also a way for all of us to meet and connect as well, So if somebody out here, they might know somebody who has an apartment building, that, they're struggling to collect rent with right now, which is where we've been doing really well, is figuring, and the thing right now is like, we're not going to have a problem finding deals over the next 6 to 12 months. There's going to be way more deals than we know what to do with. A lot of the ways so one of the ways that you could easily like get started is, talking to other real estate agents, other brokers, property management companies. If you saw a for rent sign in the front yard of a house or apartment building, that's a potential lead, that you could do either to there's so many options out there. You could do lease option, you could do subject to. Seller financing right now is really big. There's just so many options, and you can Google all the. I mean, you could look all this stuff up on YouTube, like subject to,
Yes.
And
I think that those are really great ways to go about it, right? Having conversations and getting in a consistent routine of reaching out to landlords that may not have the same type of outlook that Mitch has. Maybe they're a little bit older in age. Maybe they don't live close to the property. So it's very, very hard to run a building that you're 100 miles plus away from, especially if you don't have, like Mitch's point, the right team in place. And that's where we see a lot of sellers end up becoming motivated because it wasn't what they expected. The expenses are way more than what was anticipated. They have a lot of turnover expense. They have a lot of people not paying rent. They've got a lot of, police activity going, disturbing the tenants. The good tenants move out because they don't feel safe. I think the biggest thing that I learned initially in apartments, Mitch, was you have to be able to secure the property.
Yeah.
Meaning, like, physically, people feel safe at night. People feel that not everybody off the street can just walk in there and roam around and being able to secure it and have the tenants having peace of mind is huge. And so when you're buying a property, you got to look at those kind of things that if you don't have experience, it may not occur to you, right? But like, how easy is it for people to come in and out? Is there locked gates? Is there a place that people can park their car and not feel like it's going to get broken into? Is there a lot of people that are just, having traffic? Traffic is a bad thing in apartments, right? If you have nonstop traffic coming in at all nights, usually that isn't really legal, Yeah. And so the people that, are trying to raise kids there or have an honest living have to get up at 7 a.m. to start the workday. And then you got the burnout next door blasting his music and having parties all night. It's not going to be a conducive environment for very long. Like, people are going to like bail, right? And so,
yeah,
that's the thing that I think of all the time is like, can we control it?
You know what? So one of the things that we do when I started out, and we're doing it the exact same way, I've learned a lot of things throughout the process. So one of the first things that we do is we provide security for the residents. We put in, power gate systems with locks. And then in order to offset it, because we want to provide security for the residents, but we don't want them to feel like they're locked in a prison with, these black wrought iron gates and that kind of stuff. So what we do is we paint the wrought iron gates the same color as we paint the properties. So it kind of it softens it, but it also provides this protection for them. Some of the other things that we've added in order, to keep non-residents out is, we have the property management team. Everybody who owns a car gets a remote. If you don't own a car, you don't get a remote to the gate unless you're a senior and you have like senior care, coming in. And then the other thing that we do too is we require parking permits. So everybody who has a car has to have the vehicle registered. If it's 2 people, 2 vehicles, the license plates are on there. We have a tow company service now, so they'll go through and patrol. And it was one of the ways that we were able to buy houses in neighborhoods that they used to be dominated by drug dealers. One of the complexes I bought when we first bought it, the very first thing that we did, it was REO. It was in a neighborhood. I remember driving through the neighborhood. There were drug spotters on the corners. There were the shoes hanging from the power lines. If anybody doesn't know what that means, it means that that's the drug spot.
Yep.
And what we did was we put power gates in. We put in LED parking lot lights. And a lot of the lighting that we do at the complexes are stadium lights. We put in lights in the parking structures. We put them around the complexes. We put security cameras in. And what that does is it gives people security, And so, and I've even tested it out recently where we have 3 different complexes in one neighborhood. And then we had a new complex that we bought in there. And we didn't put the power gates in right up front in the beginning. And so what happened was when we started leasing, we did all the other renovations to the property. We do paint, windows, cosmetic lighting, interior flooring paint, all that good stuff. And what happened was we didn't have the power gate system in there. So when we started leasing, people would come in and, because there's homeless issues and all this other kind of stuff going on, we weren't leasing the units. As soon as we put the power gate system in there and we put the LED lights right at the power gate system, that completely changed it. We leased actually 2 units within a week. And then the third one and then the fourth one started increasing. So, and then what's interesting too is I drive around these properties at nighttime because I want to see, how is it to live at this complex? How is the living for the people who are paying their rent every month, and trying to live and raise their kids inside that neighborhood. And so now it's by me driving by there and my property manager thinks I'm crazy, but I want to know, I want to see, are the power gates working? Are the lights working? Is there something better that we could do to improve the livability of that?
Yeah, super important,
property?
Right? Protect your asset. You've got to, if you don't have, all those things dialed in, that's where we see it. We see it mismanaged apartment complexes are the number one reason where we find motivated sellers.
Exactly.
It's just, it gets overwhelming. They get over their head. They didn't realize what they were getting into. They weren't, educated or given the proper numbers, or the expectations were way off. Right. And so, that's what's super important to leverage, your relationships to build a solid team. And when you're getting into this and you want to take on a bigger project, aligning yourself with a guy like Mitch, right, where you can, lean on his experience, lean on his team and his contacts, so that it creates a win-win situation. Yes, you're going to give up, a portion of the deal, but your experience level, how, you're going to see firsthand how a first-class operator, runs his business. That is. It's almost invaluable, right? To be able to learn and have a great partner. And that's really what you're offering, right? You're telling guys out there that are listening to this, or people that want to get into investing, hey, come to me, let's do the deal together. I'll give you equity in the deal. You could leverage my team. You're not going to have to figure out how you're going to manage it. You're not going to figure out how much we could rent it for, the whole process. We have vendors and contractors that, give us better prices than going to Lowe's or Home Depot, right? I mean, just all these things, that have an advantage for those out there that are wanting to get into this niche.
Well, so a couple of other things too, like if you're starting out right now, some of the easiest ways to make money in real estate right now, I think, are Airbnb. And we have Airbnbs right now. And in 6 weeks ago, we had a whole series of, 5-6 more that we were getting ready to put active. We have 6 right now. We had 6 more that were going to go active. And then what happened was COVID-19 hit and we started getting cancellations, So then we got a little nervous. So we're like, okay, well, let's just go ahead and, rent out the units with Housing Authority or just regular renters, and so we did that. And then all of a sudden in the past 4 weeks, all of the Airbnbs are booked all the way through the end of summer now.
Wow.
And what's happened is we've had this this shift where it's not people renting for 3 or 4 days at a time. They're renting for like 1 to 4 months at a time. And they're paying 2 to 3x of what the normal rent would be. And so everybody's like, well, why do you think that is? And the reason why I think that's happening is because 90% of the hotels are vacant right now. They're either shut down or people don't want to stay there because, you know, they don't have a kitchen, there's too many people, you know, whatever it may be. But you still have people traveling right now. Like we've had people come in working for high-speed rail, traveling nurses, business people. Unfortunately, we did have a drug dealer last week, so we got to deal with that, you know. So, you know,
that's
real.
Yeah, if you own a bunch of kids and you're in this for long enough, you're going to run into those not so pleasant guests and tenants. It's just part of the deal, right? You can't. It just comes with it, you know.
Yeah, but the thing is though, with the Airbnb though, you know, what is nice about it though is that you do have Airbnb as your business partner. So, you know, Airbnb you can completely learn to run by yourself too. I mean, this is not rocket science. This is something like you could download the app and start immediately. You know, I mean, it's one of the fastest ways I think where you can get in. And you know, there's some upfront costs involved with it, though. I won't say that you know that it's you know that there's no money involved.
What doesn't that makes sense?
Yeah. Know? So, but I mean, but the other thing too is like you don't need to go and buy. You know, so right now, like you know, you could. The first Airbnb we did, by the way, the furniture all came from my sister's garage and from stuff that we just had laying around. It wasn't like we went out to like, you know, furniture stores, spent like $10,000, you know, literally we just like, you know, we went and found mattresses at an auction, you know, that were brand new, but they were brand new mattresses. We just pulled furniture that we had together and because we wanted to test it out and make sure it was going to work. And so, and it did. I mean, it worked immediately. And now it's like a lot of people, this is one of my favorite things too. And so no matter where you live out in America, everybody thinks that Airbnb or VRBO is for vacation cities like Newport and San Diego and San Francisco and New York. The smaller communities probably right now even have a higher demand for Airbnb because you still have people traveling for business. There's nurses, there's doctors, there's people going to visit their kids. You know, right now the colleges are shut down and stuff, but you know, everybody, when we did the first Airbnb in Fresno, you know, it was in a location that most people probably would not think you would have an Airbnb there. It has been booked for 2 years straight now. I mean, pretty much the whole entire time, even through COVID-19, you know, so it could be in any city, you know, it could be in Jacksonville, Florida. It could be in, you know, a tertiary market, you know, where maybe there's only 100,000 people, you know, Visalia, Bakersfield, Sacramento, you know, there's people constantly, you know, traveling for one reason or another, even during these times right now. And, you know, it's probably, I think, honestly, it's the easiest way to like get in where you could buy, you know, a duplex, triplex, fourplex, 6 units, 8 units, and, you know, and try it out. We have an 8-unit apartment complex right now where we have 2 units that have Airbnb and the other 6 are housing authority.
Got it.
You know,
guys, if you're watching, you got quite a few people still watching here. We're about an hour into it. And again, we do these to provide value to you. So please, I encourage you, if you're brave enough, come on live. Like you've got Mitch, who's a big-time operator. He's spending his morning here with us. Post your questions. Use this as an opportunity to. There's no stupid question, right? You know,
not at all.
We want interaction. We want people to, you know, put themselves out there. And if you feel like, oh man, maybe this isn't a high-level question, there's no such thing. So don't be bashful. You know, the people that get ahead in this business and in life are always curious. They're always asking questions. They're always trying to figure out different ways and avenues to become successful. So, you know, as Mitch said when he started, he found ways to provide value. He found ways to look at things differently. And that grew his business. So, if you sit on your hands and you sit back and be passive, it's not ever going to serve you, right? You got to be able to kind of speak up. You got to be able to be vulnerable, ask questions, try to figure out where you fit in this whole thing. And that's where you'll start to get momentum for your business, and you get more experience, and more experience will lead to more confidence and more relationships and more opportunities. So again, if you're watching, you got questions, I just want to encourage you. And even if you want to come live with us, that's even better. We'll put you on the hot seat.
I think a lot of people right now too are probably thinking about like, well, how are you financing deals right now? That's a variation.
Do you like HELOC or Fannie Mae loans for the BRRRR method to acquire more properties?
You know what? Right now, to me, it seems like the best lenders are small community banks right now. We're seeing interest rates, at least on 5 units and above, interest rates anywhere between 3.5% to 4.5%. Like Citizens Bank right now is giving us a really good loan quote on an entire portfolio of properties. Sometimes you got to think about that too. Like you could take a triplex and go out and try to get your Fannie Mae loan. The challenge, I don't know about on 1 to 4 units right now, but Fannie Mae on 5 units and above is requiring 9 months of principal and interest
as a reserve.
Yeah, so that's a little challenging. What if you only have, and on top of that, some of the big box banks out there right now, they're coming back. They're quoting loans, with 30% down, and then coming back and requiring 35 or 40% down. Like we have a property in escrow right now that we're selling, and the lender is requiring 40% down for the buyer.
Wow.
So there's a negotiation in that too. Like we had to concede a little bit too. Sometimes people are being a little hard on their price or whatever, but it has to be a win-win for you and the buyer, or you and the seller. But the best way to negotiate is ask another question. Are there any other options? What exactly are you looking for? And then also letting them know, like, hey, look, this has to be a win-win for both of us. So I can't do this, but I can do that. The mortgage brokers right now too. That's what I did was like, so we were in the middle of a refinance in the middle of COVID-19, and we were going with a bank out of Southern California. And then right in the middle of the loan, they paused, and luckily, like we were about to put $50,000 deposit in for appraisals.
Mm-hmm.
It was on a big refinance, and had we have put that money in and paid the appraisals, and then they paused, we would have lost all that money.
Yeah,
so
not cheap.
It's not cheap, But I'll tell you who's really out there like hustling right now are the mortgage broker guys. Because think about it, like they went from like all these banks and lenders and secondary, non-QM market, and all these different, Finance of America and Cash Call, all those guys had stopped lending, at one point. And so like, now it's like, oh, okay, well, now what do we do? How do we get refinanced? The mortgage brokers, same thing. There's mortgage brokers out there that are just like grinding it out. They have all these relationships, to community banks, to credit unions, to private equity firms, to insurance companies that lend money. So that's kind of what I've done is I've reached out to other people who, like say for example, like if someone who like, so like Robin Kane, everybody who knows who Robin Kane is, one of the biggest brokers in Fresno, Paul Gestick, Brendan Kane, John Mims. I'm calling these guys and I'm asking them, who's financing the deals that you guys are selling right now?
Mm-hmm.
I need to talk to that loan broker,
Yeah.
And then those are the people, because the people who are funding deals right now, those are who you want to talk to. Like they're working in the business right now. And even say like, if it's you or Stratton or Jason or, someone like Andy Nazaroff probably knows everybody in this town. You know what I mean?
Right.
I would email him and say, hey, do you know of a good mortgage broker that I can work with? Or Benny Clay, whether it's single family residence, 1 to 4 units, 5+ units, these are people who are doing deals and working with people every single day. They're going to get you connected with the right person, the right mortgage broker, the right insurance broker, and then that way, like you can start figuring out how to get your deal funded. So that's what happened was, like, we were in the middle of a major refinance, and then all of a sudden they paused the loan. So then I started reaching out to all these different people, and I got a list of loan brokers, and I just started calling everybody and finding out like what they could do. Some of them were paused. Some of them, had local banking relationships, and even sometimes, like, I could probably walk into the bank and probably try to work directly with the bank. But this actually happened. I talked to one bank and they gave me one quote. And then I talked to a mortgage broker and he went into the same place and got me a better deal.
Go figure, huh? Wow.
That just happened recently.
Power of network, right? You never know where it could lead you.
And the other thing too is I think that that we probably, like, that's something we're looking for right now, is like we're looking for lenders who can lend on 1 to 4 units, because I think that's probably one of the challenges right now. A lot of the small community banks aren't lending on 1 to 4 units that I've seen, but I've heard that there's some credit unions like out of LA and Southern California that are lending on those. But if you could find just reaching out, if anybody has any good lenders that are lending on 1 to 4 refi, I'm looking for those also. The other thing that you can do too is you can bundle your smaller complexes together and go out and get a portfolio loan. So let's say you had, you went out and you bought a triplex, and you used hard money or a private lender, and then let's say you bought 2 or 3 more together. You could actually take all 4 of those and go do a portfolio loan with a lender that doesn't normally lend on 1 to 4 units.
Got it.
So,
nice. Okay, guys, we're about 1 hour and 15 minutes in. I want to protect and respect Mitch's time. So we're going to go here a few more minutes. And if you guys have any specific questions, let's let them roll in. Mike, thanks, Mitch and Matt, for doing this. Mitch, do you ever include self-directed IRA monies in your syndication type deals?
Yeah, actually, most of our syndication deals are funded by people who have self-directed 401ks, self-directed IRAs, retirement accounts, Schwab accounts, pretty much any kind of retirement fund. The only ones that usually you can't invest with is if you have just a regular 401k within your, let's say you worked for a medical group that had a 401k that was, all in one. But there's also ways that, that you could probably talk to someone who does self-directed, where you could have that money moved into a self-directed account where you have control over your retirement funds.
Show just on that. There's power in a self-directed IRA. If you guys are wanting more information about that, I do have someone that I could refer you to. That's really great. They're a wealth of knowledge. They usually will do a consultation free of charge. So if you've got money sitting in a 401k and you're tired of it going down with the stock market, there's so much power in being able to control where your money's being directed through. You could lend through that, right? You could buy deals through that, and it all can be tax-free in certain environments. So the more information you get and the more knowledge you get, it can just accelerate your wealth building process so much quicker. Yeah,
I was looking at some of the questions here, just to kind of go over a couple of them. So the HELOC and the Fannie Mae stuff. Right now, we're getting quoted we're doing a big kind of like a portfolio loan right now, where we have 9 properties, and it's mixed between 16 units, 24s, triplexes, 4-unit complexes. Some of those have Airbnb, some of them don't. And we're going into one loan, a 10-year fixed term is what we're looking for at 4.25%. We opted to kind of go that way as opposed to like individual financing of every single property, mainly because the lender, like some of the properties are going to have more equity than, like the bigger properties, because we bought them cheaper per door, are going to have more equity than, say, a property that's in, a Class B neighborhood where we paid a lot more for that property. But, let's say we have that property doing Airbnb, but we have another one by the university that we paid, $60 a door for, or something like that.
Right.
And, the other part of it too is like when you're working with banks, what happens is you want to find, you do want to find, it's just like, relationships. Everything is based on relationships at the end of the day. So, whether it's your mortgage broker, your real estate broker, your property manager, your insurance broker, and it's not to say that you can't have more than one relationship, but a lot of the times, like I'm depending on these relationships and they're depending on me too, right? And that's how we kind of build our businesses together. And one of the things too is building banking relationships as well. Using local community banks is huge, especially right now moving forward, because they have money and banks need to lend money. Banks do not survive unless they lend money. That's the reality of it. So if you could build a local banking relationship and asking them questions, what is your lending limit? Most people aren't going to walk in there and ask these kind of questions. If you get in there and let's say even if you're doing your first deals, like walk in and ask, are you guys lending on 1 to 4 units? Are you lending on 5+? What's your lending limit? Are you doing lines of credit? Somebody was asking about the HELOC stuff. I personally would rather have a relationship with a local bank or multiple local banks at this point and kind of moving forward, because they're not requiring. Some of them might, but a lot of the banks that I've talked to, they're not requiring these mortgage reserves. Fannie Mae is requiring 9 months of principal and interest right now. Some of the Freddie Mac loans are that way. They are going to require, if it's under $1 million loan, they are going to require a guarantee, personal guarantee. Some people are afraid of that. But the reality of it is like when you bought your car, there's a personal guarantee. When you bought your house, there's a personal guarantee. There's personal guarantees on your credit cards.
Yeah.
Why would you not invest in yourself and in your business and, and sign on the loan? Don't think about what the worst case scenario is. Think about what would you do in order to make sure that you make that payment every single month,
Sure.
So George was asking about what I recommend fourplexes. I think fourplexes are great because you could start out buying a fourplex. You could retain 3 residents, vacate 1 unit, turn that into Airbnb, make sure the model works for that unit. And then what it does is it instantly increases your cash flow. Because at the end of the day, owning apartments, it's about cash flow. It's about passive income. And if anybody doesn't know the difference between, how you're taxed on wholesaling properties, on flipping single family residence, and owning apartment buildings, I've done all 3 now.
Yeah.
And I can tell you with certainty that passive income is taxed at the lowest rate. You also get depreciation and write-offs. And the whole goal at the end of the day is to receive passive income and pay the lowest amount of tax. And that is one of the best ways to do it. And it's not to say you can't do a variation of it, because I do a variation of it right now where we are, wholesaling properties. We're also flipping apartment buildings, and then we also own properties long-term. Well, what happens is when you're depreciating your expenses with apartments and you're depreciating the renovations that you've done to the properties, what it does is it's offsetting the income that you're making, your regular earned income.
There you go. Yeah.
So like right now, like I can take in a lot of regular income right now because I have lots of write-offs and depreciation on the multifamily side. So that, you don't have to pay a lot of taxes.
You can go dollar for dollar on that and really
Yeah.
without any, tax liabilities that you have on your gain, right? On your personal income. Just huge. Just some different levels to it,
Yeah. Let's see. Was there any other questions in here?
think we got it. I think we got most of the questions answered. Okay, so Mitch, what's the best way for people to reach you?
The two ways to reach, I don't know if you can put it up there, is legacyax.com and mitchpomeroy.com.
Let me put that here. And mitchpomeroy.com.
There you go.
So reach out to Mitch on through his website, mitchpomeroy.com, legacyax.com, acquisitions, and you're on Instagram at Mitch Pomeroy.
Yeah, it's actually my last Pomeroy Mitch.
Okay.
Yeah.
And obviously Facebook. So again, guys, great wealth of knowledge, a lot of experience. Encourage you to reach out if you've got something that you have questions on. Appreciate you taking the time today, Mitch. I know you got a lot going on, so
absolutely.
This is cool. We'll have this up in on the Facebook feed. Thanks, Steve Vondran. Thanks, guys. Thanks for the show. Very informative. Thanks, Steve. Appreciate you guys tuning in, and we'll wrap it up with what you got? Anything else you want to throw in there before we wrap it up?
No, I just want to thank everybody, for giving us the opportunity, to share our experiences with you. Somebody in there said, one of the biggest things right now is, just showing people that you're human too. We all have experiences. I think if we share them and we help each other, we can all kind of grow together. And it was kind of my whole point. Like I said, when I came up with 10,000 units, it was to build wealth with people that I know, like me, create partnerships, collaborate, so that we can kind of grow wealthy together.
I love it, my man. It's
all right.
Big goals, big dreams, and everyone can fit inside. So I encourage you guys, reach out, let's do some deals, and you guys have a great day, and always be phenomenal, and God bless.
Thank you, everybody. Have a great day.
All righty.